OMG. Welcome back to Infinite Investors, the home for all new and non-investors. I'm Curtis, and OMG. What a week. What a week we've had in the market. It's been absolutely crazy. Good crazy, if there's ever such a thing. In this context, there definitely is such a thing as good crazy. So I'm going to take you through my portfolio performance for this week. I'm going to also give you an insight into my last year's overall return. I'm going to talk a little bit about the 2020 vision, but that video is coming tomorrow. So if you have not subscribed, please subscribe, hit that bell notification, and tomorrow you will get my 2020 vision, which will comprise of my philosophy, my strategy, my vision, my goals, my targets, my investment criteria. Every single thing that I'm going to do is going to be listed in that 2020 vision video. So if you want to know that, then obviously go and check that out. But first, let's get into today's video. What a week we've had. Obviously, Boris Johnson won by a landslide victory, which you can see from the 7-day graph, and obviously ICE was around 21.93, 21.183, whatever, and it's just literally spiked. I've gained 1,268 between this portfolio and obviously my basic account portfolio. I've gained £1,268 in a day, which is incredible. It's the single biggest return I've ever made in one day period. So let's get into some of the great performers, and we're gonna have to start with this is the stock right now. This is the stock. It's not even right now, it's always been the stock. I've invested into Virgin Money since day one, since yesterday last year, and you can see from my 1 year's performance, I bought Virgin Money when it was about £1.82 originally. Look how it was staying up, and then it started to dip and it started to tank. And this is when a lot of people went running scared on Virgin Money and started to say, Curtis, I've got comments saying, Curtis, you need to sell. Why are you holding on to Virgin Money? Like, I don't know if you what's drawing you to it. You've got Barclays, you've got Lloyds, etc., etc. And for me, if I was to get rid of any of the free banking stocks, it would have been Barclays. I would have kept Lloyds and Virgin Money, as I just felt that they were the most undervalued opportunities. Virgin Money has had an absolutely monumental performance in the last week, growing 24.13% in the last 7 days alone. And at the moment, you can see here that Virgin Money is giving me a 48.81% return. That's astronomical. That's legitimately astronomical. That for me is, I know obviously some of you lot are getting higher returns in AMD and Teslas and stuff like that because of the time you invested, but for my portfolio being a value portfolio, not a growth portfolio, I think that is a fantastic return over the course of the year. And I'm happy that when it was low, I didn't panic, and you can just see from the activity, I just kept on buying, bigger sums, and I kept on buying and buying and buying, and I was just doing that while it was low. And I could have bought more, to be honest. There was some times that actually I probably did panic a little bit and just, felt, let me hold rather than buy more. It could be even higher. But yeah, Virgin Money at the moment is definitely looking sunny, and I'm excited. And to be honest, I still think Virgin Money is pretty undervalued. Like if you look at the max graph, you can see where we're sitting at now. It was around £3, at the highs of £3.48 only in August 2018, so not that long ago. So if there's no PPI issues, if there's no mad regulatory issues, if we don't go into a recession, for me, there is no reason why Virgin Money can't get to the likes of £2.50, can't get to the likes of £2.75. I mean, if it was at £3.30, it might even get to the likes of £3 in the course of next year. So I still see this as a buying opportunity. I'm still going long on Virgin Money, and that's going to be something that I'm going to continue investing in over the course of next year. I think they've made some sound decisions. Even cutting their dividend, I think, is a sound decision. And you know what would I prefer, an annual dividend of 35p or a return of £611? So you know what, sometimes you have to see which is going to give you the best opportunity. And they made a wise decision cutting their dividend based off what happened with the PPI situation. And I'm definitely still going long on Virgin Money. The next stock that's had a phenomenal performance, and you know what, I've only got myself to blame for not continually investing into this company, but in the last 7 days I have received, as you can see, a 14.5% performance with Barrett. Obviously, it's just been phenomenal. You can see, obviously, from the month, this is what it looks like as well. Barrett has just absolutely skyrocketed for me. But let's look over the course of the year. Barrett has always consistently gone up. Yeah, there's been a little dips here and there. If I use the scrubber, come on, scrubber, here you go. There's been, dips here and there, but this is prototypical stock market dips, right? Stock market is going to have dips, but this is a lovely stock market graph. And yeah, Barrett Development has been a phenomenal stock. It's actually gone up 73.7% in the last year, 73.67%, as you can see here. And that is a phenomenal amount of growth. My portfolio return is 33.45%, and that goes to hold the way I invested, and I'm going to talk more about that in my 2020 vision. People always say, Curtis, if you invested in this fund, you would have got 15% return. No, I wouldn't. I would have got a 3 or 4% return, because you're buying at higher prices. So when you're buying at higher prices, you are going to diminish your returns. It's just part of the game. When you buy at lower prices, you will increase your returns. That is the way the stock market works, and that's why you should be selling when you're going up and buying when you're going down. But it's often taught and never a followed practice. But yeah, I'm sitting at 33.45%, and again, I still think Barrett has a long way to go as well. They are at some decent highs, but according to Simply Wall Street, they could still be about 23.1% undervalued. In terms of their balance sheet is phenomenal. They've got pretty much negligible, if not any, debt on their balance sheet, and they're well covered, and they pay a 6% dividend yield at the moment, 6.07%, and it's well covered, and they can continue to do that going forward. So you know what, Barrett, for me, I'm still going long on Barrett, and in fact, because I think Barrett is going to do well in 2020, I'm probably going to try and dump a little bit more now, just to try and preempt it rising and try and benefit from that. The next stock, the third stock to basically talk about that's done phenomenally well for me is, also in the last 7 days, that is Taylor Wimpey. So you guys know the house building stocks and the banking stocks did great, and so there's obviously two house builder stocks, but you can again see, look, I mean, these are just straight lines up, like they're just straight lines, like the line is straight. This is so straight, I can measure, this is straight. It's like a hair. This is a straight hairline. This is a shape up. Like it's looking good right now, and I'm sitting at 20% return overall with Taylor Wimpey. One thing I liked about Taylor Wimpey, it was one of the best dividend payers for me over the course of last year as well. So Taylor Wimpey's paid a pretty decent dividend. I think the dividend yield now is obviously dropped just because the share price has risen quite significantly. So it's about 9.2% now, but it was like in a 10 or 12% before. The question of holding Taylor Wimpey going forward, I think I need to do a little bit more evaluation into whether I'm going to continue Taylor Wimpey to next year, but I don't have no reason to not. And if you look at my overall performance, obviously you can see that I'm sitting at 20.6%, but with dividends, it's about 33.5%, getting that data from Simply Wall Street. So with my dividends and my capital gains, Taylor Wimpey has done a great performance over the last year for me, and I wouldn't have got that money in the savings account. I wouldn't have got that return in the savings account. And so, you know what, why wouldn't I keep it unless there's something absolutely tragic that tends to happen, such as a recession, and we'll have to play it by ear from there. Some other notable performances that weren't obviously in the top three was Barclays. They done a good result for me, and let me just update this quickly. So Barclays for me, in the last 7 days, you can see it was 6.29% return, which is good. Also, I've got good returns from Legal and General. That's been another stock that's just, for me, I think been consistently good, and I'm sitting right now at a 19% return overall with Legal and General. And yeah, if I look at the last year with Legal and General, you can just see there has been some dips, but I just kept on buying. I kept on buying if you look at the activity, and yeah, it's just something that I never stopped. Like you can see, I continually invested into it over the course of the year as well. But I still think there's some opportunity with Legal and General as well. You can't really see it here, but yeah, I still think there's some growth opportunity, some value opportunity in that stock as well. And Shopify was a stock that, you know, I timed poorly on the market, but look, it's been doing well over the last 7 days and over the last month. I timed poorly trying to time its earnings, but you know, it started to rise, and you know, these are some of the growth stocks and, you know, the changes in the 2020 vision and the strategy, which a lot more is going to be spoke about in the next year. Now, in terms of some of the worst performers so far in the last 7 days, we've got Facebook. So Facebook has fallen 3.45% according to Simply Wall Street. According to here, it's 2.14%. And yeah, Facebook is going to come up against a lot of challenges over the next year in terms of regulatory challenges, you know, being broken up by the Senate and whatnot. So it'll be interesting to see what happens there. Again, I have a small holding into Facebook compared relatively to some other UK stocks, etc. So it's not the worst for me, but yeah, it's not been doing so well of late. Also, my S&P 500, so America's taken a little bit of a beating at the moment, so that has gone down in the last 7 days as well, as you can see. And I see that as a buying opportunity. That's something I'll always hold, whether it goes up or down, forever. I will always hold the S&P 500. Facts. So I'm just going to put more money into that, and that's going to be my opportunity. And also my emerging markets bond, which is a difficult one because I have it because it's my monthly dividend pay, and I'm hoping that I can buy more and it can pay for my free trade ISA charge. However, it is continuing to go down, so hopefully when there's more monthly dividend stocks, there might be something I change to. I did buy it as a hedging play, obviously because of the recession, but I can just see this going down and down, similar to gold producers going down and down, just because we look like the market is quite positive at the moment, and it's probably going to stay that way until there is such a thing as a very, very, very disorderly Brexit, which is probably not going to happen. Might be some things that people won't be happy with, but I doubt it will be absolutely chaotic, or a recession. But you know, the first chance of a recession can't even be until summer next year, so I still think there's 6 months of potential opportunity with the portfolio, but with these specific stocks, they're probably still going to go down for the next 6 months, so who knows. It'll be interesting to see what happens there. So yeah, overall I'm currently sitting at 10.47% return, which is great. And funnily enough, yesterday was the end of my last financial year, and I ended at 6.31% return. But my goal for the year, which I've always mentioned, was 10% return for the year. So literally day 366 I get to a 10% return, but day 365 I was at a 6.31% return. But you know what, that's just a little bit of luck. Who could have predicted there was going to be another general election? Who could have predicted that Boris Johnson would win? You would never even know that those things were even on the card. You know, this time last year, let's not forget, Theresa May was Prime Minister. So, you know, it was a completely different landscape. We didn't even know there would be a general election at this time of the year. We didn't know Boris Johnson would be Prime Minister at this time of the year. So there's just so much macroeconomic factors. And I'm going to do another video just to explain the importance of the macroeconomic landscape on your portfolio. Like, I personally look at my last year's performance, and, you know, I mean, it's going up because of my investments. But primarily, a lot of the dips and a lot of the challenges that I've gone through with it is been due to macroeconomic factors. There's been some bad buys. I think Imperial Brands hasn't been the greatest buy, if I'm brutally honest. I mean, Imperial Brands has shot up 4.3% in the last 7 days or whatnot, but I do think it's it's not been the greatest of buys. However, I'm never going to sell at a double-digit loss, so I'm at 10%. You can see I've been averaging down crazily with some of these recent buys, and I'm going to continue to do so because I don't sell at double-digit losses. So that is going to be interesting in terms of what's happening there. But yeah, portfolio update, up 5% in the last week, sitting at 10.47% now. No dividends to report on at this current juncture in time. And yeah, this is the first day of 2020 for me in terms of the financial year, and tomorrow you're going to see my 2020 vision video, and I'm going to show you all of the things that I'm going to be doing in 2020 to try and get to my performance targets, which I'm going to reveal in tomorrow's video. So yeah, hopefully you found this interesting. 1,268 in a day, you know. Even my REITs have done well. Like it's been great. I know one of you guys was like, why did you invest into British land? Because it's good REIT. And I don't invest if something is just down. Like I don't sell if things are down. Like I try and look at the fundamentals always and actually work out, could this be a good opportunity? But yeah, listen, a lot more is going to come in tomorrow's video, so check that out. Please like, please comment, please subscribe, and I will catch you next time with another investment video. Peace.